Okay. Sorry for the tardiness. My Nespresso machine blew up. I saw error messages I've never seen before. Yeah. Oh no. What am I going to do now? No, it seems to be fixed now. All right, you guys ready to get going? What's going on, Darko? It always reminds me of Red Hot Chili Peppers. Darko, I'm with you, buddy. That's my number one goal too. All right. Let's get on with it, Bubba. All right. We'll turn that off. Good morning, everybody. Come and tell-vous. How are you? It is 8 o'clock in the morning. Good to see you. Welcome to my home office. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader just like you, like a boss. Turn this off, man. It's bright in here, man. It's bright. It's bright. Morning. How are you? Nice to see you. So today we are going to go through the markets. We're going to look at, I think, mostly dollar pairs, yen pairs, and I think I'll look at the stock market. You'll look at some other things. It was interesting because I went through the market last night with the day trading group, and I'm like, looking at things since then, and we'll do it again, but it was the right thing. The thing is, as a trader, sometimes we confuse what our job is. Is our job really to trade? I know that's the title. Oh, you're a trader. But what I used to say many years ago is that you're not a trader. You don't get paid to trade. A broker gets paid to trade. Your job is to look for opportunities in which the reward pays more than the potential risk. You're a profiteer. You're simply every single day looking for, let's say, low-hanging fruit. You're trying to look for reasonable opportunities to make a profit. That's not necessarily trade every day. So you got to be careful if you're trading every single day because you think you should be doing something. you probably focus too much on technical analysis. Because if you go through enough charts, you'll find some type of trade, won't you? But that's not the point. You're trying to find an opportunity to profit, not an opportunity to trade. So anywho, yeah. On how's like I'm having trouble to understanding currency correlation coefficients and how to trade it. Really? Sure, we can do that. Easy peasy lemon squeezy. Were you talking about an R value? Anywho, yeah. So anyways, just remind yourself your job is to look for opportunities to profit. And over the course of a year, if you're looking at your trading results yearly or quarterly, then you don't necessarily have to trade if there's no obvious opportunity. What if the market conditions are blah or meh or ugh? Should you be throwing down money? Right, PJ? Right? So anywho, always keep that in mind. So yesterday I'm like, don't see obvious opportunities to make money. I see obvious signs of hitting targets and obvious signs of mediocrity. And so anyway, we'll see if anything's changed. We have a new quarter coming up. I hope you signed up for the quarterly presentation today. Today at noon, which is 4 hours from now, I will be doing a quarterly outlook so that we can get a sense of where the markets were, where they are now, and where they are likely to go. We're going to look at microeconomics, macroeconomics, and we're going to analyze monetary policy via the Fed. Yes, there will be a recording. Okay, I'll show you. Okay, there will be a recording. So when you pay, it'll unlock this part of Quant-in-a-Box. You'll have a little page like this, and the presentation will be here. It's like a Zoom room built into Quant-in-a-Box, which is nice. Okay, and the recording will be here for 7 days, and then it'll disappear. Forever and ever and ever and ever and ever and ever and ever. Okay, so 7 days and then gone. So I welcome you to join us. Yeah, we did this over the weekend, or we did an annual outlook, so this is an update as we go. I think most of you attended the annual one, and then you asked me to do a quarterly one, so I have. So you have a responsibility to sign up because you asked me to do it, so now I've done it. Cool. Anyways, so that's that. We'll get back. Let me go back to here. In the description below, there's a link, I think, to this. Maybe, did I put it here? No, there isn't a link. So it'll have to be in the chat. Use the link in the chat. In the description below the video, there's lots and lots and lots of resources available to you. Why are there so many songs about rainbows? Why are there so many resources? Well, I've been doing these live streams for about 20 years now. And over the course of 25 years, people have asked for additional resources for help. They said, will you write a book? Yeah. So the link is in the description below. The book is Strategic and Tactical Forex Trading. People also asked, Wayne, can you do training videos? Yep. So I created fxbootcamp.com. Then people said, Wayne, can you do some live groups? And I'm like, okay. So we have a couple of live groups that meet frequently. sometimes multiple times a day at fxbootcamp.com. So you just upgrade your account there. Okay. Now there's a new service where people are like, Wayne, can you help me do fundamental analysis? Yeah. So a link to Quant-Box, your macroeconomic Quant-in-a-Box, is in the description below. Quant-box.co. There, people have asked, Wayne, do you know a trustworthy, ethical foreign exchange broker that has amazing execution speeds, narrow spreads, huge swaps, a world-class customer service? I'm like, yeah, tradersway.com. The link is in the description below. All these amazing resources available to you. And of course, please subscribe. I've been doing, like I said, I've been doing these live events every day for nearly 20 years, for free. So thank you for being here, and thank you for being part of my community, or our community. So anyways, that's that. If you're inside Quant-Box, you'll see it's right here. Okay. So when you log in, you'll find it right here. Cool, right? Okay now. Okay. Yeah, Reg Neal wants a link to cutecanadiangirls.com. All right. Let's start somewhere else. Let's move along. Where should we start? I want to look at the longer term. Okay. Oh, there's more than one cute girl in Canada. Sky Killer says, hey, Coach, will you upload the recording of the last FOMC live on the community? No. When I do a 3-hour live event, I don't record them. Yeah. There's nothing directly educational about them. We watch them as a community. I analyze it in real time. I talk about it in real time. I talk over questions that the press corps asks, Jay Powell. I interpret what's being said back, but no, it's not really something that I deem appropriate for sort of recording. If you can make it, you can make it. So anyways, Aussie week, CAD week, Kiwi week, and everything else kind of sideways-ish. A lot of vol over here on the dollar and the yen. And then you translate that over, and what you see is stuck in the middle. Okay, stuck in the middle. If I go into a smaller time frame, okay, once again, we've gone up, we've hit our resistance, come down. So maybe, just maybe this is now developed into something. Okay, that's great. So imagine this is sort of a support zone. So you could take that north. What do you think about that one? Okay. Cool, right? What do you think? Sky Killer says, wouldn't it be better to only start selling the dollar after the meeting that they stop? Well, here's the thing. Okay. Okay, here's the thing. We already know what's going to happen at the next meeting. So if you're waiting for this meeting versus the meeting after, like the meeting coming up, which is what, May, and then the next one is what, June? And then what? The next one's what, September? Or August, I guess. Is it August or is it? I guess there's a July and then September. Anyways, the question is, don't you wait until it's happened. Here's the thing, Sky Killer. It's a game. We're all playing a game and we're all jostling for position. So if most people already think that the rate hike is coming up at the next meeting, then we've already added that into the move. So remember, in game theory, you're creating decision trees. Okay. So we have, oops, I guess you got to do that in a color you can see. Okay. Okay, so we're here and they raise by 25 basis points. They don't raise and they cut. Okay. And then from here, you can do this. Okay. And then from here, you do this. Right? It's this is where your decision trees get crazy. Yes, you have to do this in the middle of exams. So anyways, there's all these outcomes in the game. And based on the path you expect, you can game this whole thing out. What I'm getting to is, if you think they're going to raise in the meeting coming up, then you play it now. If you think the meeting after that they raise or pause or cut, then you play that now. So going back to Sky Killer's question, do you wait for them to just cut it, wait for the policy to come out and then react? No. The market is at least 6 months in advance already. This has all been gamified out. That's what we mean by priced in or not priced in. So no, you don't wait. No. The market is not looking backwards and saying, well, I guess they're going to pause now. They're always thinking at least 6 months in advance. And you should be too. So if the prevailing thought, I just lost my drawing tool already. Where the heck did it go? Oh, here it is. Okay. If the prevailing trend is rate hike coming in the next meeting, then euro dollar would fall. Now, if the rate hike in the next meeting is pause, euro dollar would rise. But that's only looking a few weeks out. So now if you're saying things more like, if you believe in the next 2 or 3 meetings, the Fed will be done raising. It's a different question. Okay? Then you would start building your positions now. So that's a big, long, fancy way of saying to Sky Killer, you know what? The next meeting is almost irrelevant. Because as professional investors, we've already analyzed the facts and we already have determined what is going to happen. So we already know. It's already in our strategy. It's already in our move. We've already done all of that. And that's what today is about, by the way. Okay? So pay the $11. I have a Lamborghini payment coming up, and I'm begging for your $11. Okay? So, yeah. So the thing is, what kind of information do you analyze when developing your decision tree? Not that the old one's yellow, Sky Killer. The new one is woodland camouflage with fluorescent orange accents. Beautiful. All right. So anywho, what's going on here? Okay. Stuck in a range. Okay. If you're a bear, you're going to be looking for this in the next 24 to 48 hours. If you're a bull, you probably already bought it off the neckline. That's why I drew a neckline. Okay. See, when I do these things, I just assume you understand what I'm talking about. So if I ever draw things on my chart and you don't get it, you have like a moral obligation to ask a question. Because there's probably quite a few other people that, right? And I forget, or I don't know what you don't know. But if you're a bull, you buy at support, so I identify support. If you're a bear, you sell at resistance, so I draw resistance. And if you don't know, you need to ask. So for example, if I'm doing something like this, it's quite factual what they are. We know who's going to trade there. The only thing that changes is the outcome. Now, the blue and the black arrows very specifically point out very specific prices. Now you can round them down and say the black one means if we go up to 123.26, then it's going to drop to 121.50. Okay? Where the blue one specifically says it's going to go down to 121. Okay? And from a bullish point of view, you're looking at here, that's a profit-taking price, down, up to here, that's a profit-taking price, down, and now you're going to take it up to the next level. To me, that's the only two scenarios on this chart. Okay. Am I too old for a Lambo? Yeah, maybe. Right? Because a boy would dream about owning a fast, luxurious car. A man worries about how to put two kids through college. You know, I need $400,000 to put my two children through university. $400,000. So I think if you do that, okay, it's one, right? That's, I suppose, the difference between a boy and a man. The other one wants a $400,000 car, and another one wants to propel his generation or his, his future, his family lineage. He wants to propel his family lineage to a higher level. Different dream. Completely up. Also, like the idea that you buy a fast car like that, you're going to get a pretty girl to fall in love with you. Try this on a first date. Explain to her how you have a retirement account and you're ready to start a college savings fund for your kids. She'll fall in love with you a heck of a lot faster than, look at me, I spent a lot of money on a fancy car that's hard to drive, uncomfortable, and expensive. And it's so expensive you can't take it anywhere. She's like, yep, there's a boy. I was out with my daughter recently. We're having lunch. And, I live in Georgia, so there's these giant trucks where some boy buys a huge truck and then lifts it up. So now, and it's got giant wheels, and it's got an upgraded exhaust, and it's got cool stickers, and it's got cool roll bars, and it's got bars over the headlights and custom headlights and all that kind of stuff. And I point that out, and I'm like, sweetheart, look at what this guy spends his money on. He's like, is this a guy that's going to have a down payment for a house ready when you guys get married? Is this guy got the cash to like take you to Paris, jump on a plane and fly to Paris? Or is he dead broke except for his truck? I'm like, look at the guy's truck and you can judge his maturity level. Anyways, whatever. All right. So, anyways, boys, if you want to impress a girl, financial stability is a good start. Okay. We got things moving around here. Let me put Brent and WTI. Okay. They're kicking off these huge bottoms, in particular WTI. Okay, in extreme situations, which don't happen very often, One of the things I teach boot campers is that this price and this price, oh man, if I can only draw a straight line, still can't do it. This is my fancy mouse. Okay, this line and this line, in extreme circumstances, it rarely happens. Didn't happen that month or that month or that month or that month or that month. Okay, but every once in a while it does happen, in particular on a breakout of an inside month, right? Inside month, inside month, inside month. So obviously in a range, and then pa-chow. Total devastation to the downside. In those situations, however, okay, that's the price you need to look at for taking profit. Now it's come up, it's come down, and it's come back up, and it's trying to move around like this, right? Now, what is driving this? Radical changes in fundamental data, like supply and demand? Now? No. But some people have gamified the next 6 to 12 months, or we should say the next 3 to 6 months, and based on their decision tree, okay, they're planning something quite different. It's not necessarily what's happening now. Okay? Now, Lucas is saying seasonally. Now, we did this on Wednesday, right, Lucas? Yeah. Yeah. Okay. Cash is like, what's a decision tree? Apparently you weren't here at the beginning of the webinar, but it has to do with game theory. Yeah, Thursday swing group. Yeah. And so, yeah, we've already got this planned out. But the point is that in an area like this, and it's very much time related, not just price, but time. Okay, time related. At this time, new decision trees are being made, in particular regarding Fed policy. And if you make certain decisions on your decision tree, okay, then you already got this on, because your advantage is you made your decision not just correctly, but earlier than everybody else. Okay? And so, again, at noon, in 4 hours, I will cover material that will help you make your decision. Okay. Again, I'm going to pop this link. I hope you're there. Once again, you guys asked me to do it, so I've done it. Oh, I don't have the link anymore. I don't have the link no more. I don't have the link no more. I don't have the link no more. I think it's this one. I don't have the link no more. I have the link again. Yeah, all right, good. Let me post that. Thank you, Jim. Yeah, those link decisions. So it's like, it's simpler to do this. Okay, so you're here, so you're starting the game. And let's say the next Fed meeting. Okay, let's say they raise or they don't raise. So they raise or they pause. Okay. So you got up or not down, but I don't know, not up, not down. I can't do minus because that's down. See, anyway, so, well, I'll go back to the way I had it drawn. So Add, subtract, equal, I guess, right? The same. So I think, for example, you could argue this. Okay? So from there, you make a new decision tree. And you got the same thing. Plus, equal, and minus. And if you thought this, it would be the change in policy. And you could start saying, well, what would happen to the market then? Okay? Or what would happen in the market if you thought that was the most likely outcome? What would happen in the market if you think that is coming, a cut? Okay? And you're like, well, that's very unlikely, so let's not even consider that. So now your decision is not the current meeting. The next meeting is a plus, and then the next one is a plus. Could you see that that would make you, let's say, more bullish on a dollar? If you thought someone said plus, then pause, you might have a different outlook for the dollar than a plus plus. Okay? And if you thought the next meeting was a pause immediately, and we don't even have a plus plus, you're more like pause, then you would probably take this to the next level and say, now you got a third decision tree. Plus, equal, minus. You might say pause, cut. Okay? So you'd look at this, and this would make you extremely dovish. You're like, you believe we're on the precipice of a bank failure. So you would have different decisions in how you should be trading the markets. Okay? But if you thought that is the future, then you should do it now. Okay? And this goes all the way back to the question of, like, somebody asked, Skykiller, I think, asked about, well, shouldn't we just wait for the meeting? No, because it'll be done by then. Remember, professionals are always 6 months in advance, minimum. Okay? And so that's game theory. Because here's the thing. You can analyze this and then understand what other people are deciding to do, and then you do it before them so that when they do it, it benefits you. So for example, let's say you thought the dollar, okay, is it April, June, July? Okay. So let's say in the next 90 days, you thought the dollar was going to fall. Then you should start looking to sell US dollar now. If you thought the dollar was going to be sideways, okay, you should do something else. You should not invest into the dollar. If you thought the dollar was going to rise, then you should look to buy it now. And not necessarily just buy and hold, it's buy the dip. And if you thought otherwise, you would sell the rip. You either buy the dip or sell the rip. Okay? But you don't necessarily, it's strategic. That's why it's game theory. You can game it all out. Okay? Okay? So somebody is gaming this out and making decisions on oil not likely based on the supply of oil globally or the supply of oil in the United States. Okay, they're probably making demand decisions. Because they can't control supply, but supply is relatively normal right now. So then they're making decisions on demand. How do you do that? That's what macroeconomics is. So after we go through and we look at how some things have changed in the United States since our last outlook 3 months ago, and some things have not changed, and then we kind of look at what the central bank has been talking about and doing, then we can try to determine what the next 3 months are like. And once you got those facts, you can make a decision, up, down, or sideways. Okay, so that's what the outlook is about, teaching you how to analyze the markets like a professional trader. And it doesn't necessarily put you in a trade this afternoon, but it'll help you understand what the heck's going on with oil right now. That somebody bought, okay, this is support, so that's support, okay? And then you would understand the context of which they are probably buying this. And then you could probably thread this needle and say, okay, if oil's going up here now because of XYZ decision tree, then if you agree with their decision tree, then you would decide, oh, I'm a buyer of dips. So then it dips down to here in April, and you're like, yeah, that's your plan A in April. Or if you're up there, this is your plan B in April, something more like that. If you analyze the facts and you disagree with what's going on here, then that's your opportunity because you got better alpha. Oops. So apparently something just changed. I don't know why that got so fat. But now you're like, oh, you're a bear. So some idiot bull is going to buy it up here. Okay. But they're a gullible bull. So you're going to take it down. I know that's cute, right? You get it? A gullible. Cool. Oh, it's so awesome, isn't it? Isn't it cool? All right, all right, all right. This funny video I did. It was pretty funny. Hey, just wanted to do a video to welcome you to the webinar on Monday, but I don't know, the lighting's horrible. But anyways, on Monday, we're going to go through all the facts and figures take a look at how the economy is doing, looking at microeconomic data that is not inside a quant box. But then we're going to look at the data inside. We're going to look at things like seasonality. Then we're going to break down the Fed. Ultimately, what we're trying to figure out over the next 90 days is, should we be buying the dollar? Should we be buying gold? Should we be buying the stock market? Hey, what about Bitcoin? What should we be doing? So we'll look at the cold hard facts. We'll do the analysis, and then we'll do our best to do an outlook for the second quarter of 2023.
You know, what's funny is my wife is like, "What are you doing?" Because I'm actually just holding my laptop. I just picked up my laptop. I'm like, "Hey, I should do a video with a laptop." But I'm like, I don't want to do it on my phone. And then how am I going to get it over to the computer? Blah, 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 blah. Beautiful scenery. Yeah. My neighbors' houses are so ugly. This guy's built like the ugliest house. It's brand new. Built about 2 years ago. And it's so ugly. Anyways, I'm like embarrassed. I couldn't see what was on my laptop. So, but anyways. So anyways. All right, so what's going on? What's going on? XAU. XAME. XAU. XAME. Okay, double bottom. We're at the 2 hundo. Okay. What do you think? Pretty shocking stuff. 1922, would you buy it down there? How about around 19? Okay, only if you're, well, it depends on your decision tree. Depends on how you interpret what the Fed said. Hey, I went to a cool Starbucks. Let's see if I can pick up a picture. Oh my, Bucks Rivian. What do you call that one? No, that's not right. It's pretty neat. Yeah, here it is. Let me get you some pictures of this place. Look at this. This is a Starbucks. This place used to be a tenement farm. And they had a few thousand acres. Isn't that cool? And that chimney is well over 100 years old. I sat right next to it working on the presentation. Look how cool this is. Like, isn't that like one of the coolest Starbucks ever? There isn't any more pictures. Isn't that neat? It's wild, huh? Yeah, look how nice it is. Well, Anywho, isn't that cool? So Frank says buying gold at weekly M1. Yeah, 1918. Yeah, that would be the first plan. Yeah, plan A. Yeah, that seems appropriate. Okay, seems appropriate if you're a bull on that. Once again, it would depend on your decision tree for the next quarter. But if you're thinking something to this effect, I would understand your rationale. Right? Because really, what you're deciding is that's your predominant theme, or this is your predominant theme. So you would have to know. Okay, so let's say you disagreed with Frank. Okay, here's what's going to happen if you disagree with Frank. It's going to come down. It's going to come back up. It's going to come down. It's going to come up. It's going to come down. It's going to come up. And then it's going to come down. Okay, why is it going to do that? First of all, not everybody knows. Okay, so you're going to need a double top of a double top. And then it's going to drop. And then it's finally going to get your secondary chance here. But then it's going to fall into support and get caught on support because, again, not everybody knows. And then you're going to come up much higher than you'd like, maybe even back to 1922, and then ultimately break out of the bigger range. Okay? And probably extend down further because that just gets you to the bottom. Really, still, it's not a massive breakout. So you need the next month's trade plan, which would probably, if this is a breakout down to here, you would, I suppose, if you're going to look at the high of that, the low of that, and the close of that, let's say it closes low, then yeah, we're probably targeting 1600 for the bottom of May. Okay, and then maybe even a little bit lower by June, and then a pause. So maybe down to 1550 by June 15th, and then we get to a Fed meeting probably in there, and then all bets are off. A couple of weeks before that Fed meeting. Okay, that's if Frank is wrong. If Frank's right, then it's pretty easy. Okay, you'd have to guess that's aggressive. Okay, which makes sense here. This is conservative, makes you a little more vulnerable. Why do I say a little more vulnerable? Because there are those that are going to try to make that double top I already pointed out. So they'll sell here, okay? They'll sell here, and they'll sell here. So if you're going to buy it, you should be in low. Don't buy it here, here, and here, because that would make you slow as molasses on a cold Georgia morning. Okay. Anywho, Bitcoin paused out, not really helpful. Okay, gold, oil suggesting one thing, gold suggesting the other. Okay. Stock markets are not really trending up or down. You're like, but Euro cash is up. Well, it's profit taking off of that. Okay. DAX might be up. Look at this bottom, but still not higher highs and higher lows. Same thing with FTSE. Okay, not falling, but that doesn't mean it's rising either. So, you know,
you got people are still gaming out their own decision trees. Okay? And so I look at this like, let me delete all this up here. Okay? And bulls, okay, we're ready, willing, and able to buy exactly where they should. Okay? Notice that the market reversed at exactly the right price. This is the top. Let me do this in blue just to make the point here. This top, okay, predicts this bottom. I'm not even joking. I'm not exaggerating. I'm not sort of twisting the truth. Okay? So then we have a Fed meeting, and now a potential new decision tree. Okay, and these guys were RWA. And if you disagree with them, we're getting to a price for you to disagree. Okay? But buying it now at 4,000, well, let me point it out this way. If you bought it now, are you buying low? If you bought it now, is that buying low? Because remember, a bull buys, okay? A bull buys, that's it. Bulls don't sell. Bulls buy double bottoms, okay? And higher lows. There's no other scenario. Okay, so is this a double bottom? No. Is that a higher low? No. So decide, well, what's a double bottom? Well, let's play this out. Okay, so you could say maybe you buy down in here. Okay, now it's not necessarily a double bottom, but it's a bottom. Okay, or what? Or higher high, higher low, up. So you don't buy at 4,000, you buy at 4,000. Oh, you don't buy at 4,000. You buy at 4,000. Oh. You would never buy at 4,000. Instead, you should buy at 4,000. There's a big difference, and it has to do with risk. As they say in Canada, don't buy at 4K, eh? Cool. It's just this adjusts as we go. Yeah, interesting. Cool. Anywho, I'm gonna go work on the presentation. This is it, man. Are you coming? It's 3 hours away. I'm going to continue doing some research, popping more stuff in, and then do some, put some more lipstick on the pig to make it look pretty for you. Huh? Put some lipstick and maybe a pretty flowery dress on the pig. Oh, yeah, my pleasure. Again, you guys asked for it, so I did it. I spent, like that Starbucks I showed you, I spent 5 hours there yesterday. Okay. Cash Somnia is talking about, I guess you're talking about FX Bootcamp. Yeah, if you're a video only member and you go into community, you won't see any scheduled events. Cash Omnia. If you're a swing trader and you go to community and you click on the meetups, you'll see 2 a week. One is the stop, look, and correct session, and one is the swing trading group. If you're a day trading member and you log into community, log into FX Bootcamp, go to the community tab, go to the meetups tab, you will see the day trading meetings, which is Sunday, right? Sunday, Monday, Tuesday, Wednesday. You'll see the stop, look, and correct session on Tuesday. You'll see the swing trading group on Thursday. Okay. So yeah, they're all scheduled. Yeah, and reminders are sent out and everything. It's really nice, Cash Omnia. It's very nice. Cool. So yeah, so you're in there. So I'm going to post the link one more time. One more time. I hope to see you there, y'all. Oh, now I've lost the YouTube channel. Nice. Where are you? There you are. Okay, one last time. I hope to see you there. Peace on earth. May the pips be with you. May your profits be above average. I hope to see you in 3 hours so we can plan the next 3 months with facts. And from the facts, you make your own opinions. Let's go. Boom. That just happened.